Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about KUAISHou Technology, latest report. KUAISHou Technology offers a diverse range of businesses and services that cater to various needs of its users. At the core of its operations are live streaming and online marketing platforms, which provide a space for creators to share their content with a vast audience. The company's flagship platform, KUAISHou Flagship, is a short video and content-based social networking app that allows users to create and share content. Additionally, it offers other services such as KUAISHou Express, KUAISHou Concept, Yixin Camera, and K-Movie, which cater to specific needs of its users. Beyond these platforms, KUAISHou Technology also provides entertainment services through AC Fun, a video sharing website that allows users to upload and share their videos. The company's e-commerce platform enables businesses to sell products directly to customers, while its online games section offers a range of interactive experiences for users. Furthermore, KUAISHou Technology engages in knowledge-sharing activities, providing users with access to educational content and resources. Its software development arm focuses on creating innovative technologies that enhance user experience, while its hardware division designs and manufactures cutting-edge devices. In addition to these core services, the company also offers programming and advertising services, as well as internet information and technology development. It provides promotion and other support services to help businesses reach their target audience effectively. Overall, KUAISHou Technology's diverse range of services has enabled it to become a leading player in China's digital landscape. KUAISHou Technology market capitalization of $200 billion is significantly larger than the average industry peer of roughly $19 billion. This shows that KUAISHou Technology holds a significant advantage in their industry. KUAISHou Technology trades at a lower price-to-earnings ratio of 10 times and a higher price-to-book ratio of 2.2 times relative within the industry. Despite the industry trading at relatively low valuations, the stock matrix does not show much. Investors should evaluate if the business has potential earnings that is sustainable and if the assets are valuated rationally. The leverage on the balance sheet appears elevated, with liabilities of 56% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. Additionally, special charges appear non-recurring, suggesting high earnings quality and strong financial resilience. The primary drivers of revenue growth for a company can be identified through various factors. The launch of new models, such as the Kling-Un and Kling 2.6, with advanced features like audio-visual generation capabilities and motion control, has contributed significantly to revenue growth. Additionally, the introduction of generative recommendation large models and intelligent bidding models has also driven revenue growth. The company's AIGC technology has unlocked additional budgets from marketing clients, while its end-to-end generative retrieval architecture, OneSearch, has increased search order volume by nearly 3%. The expansion of end-to-end generative recommendation technology to content-driven scenarios has propelled GMV growth. Furthermore, high-quality content uploads and private messaging engagement features have also contributed to revenue growth. The company's online marketing services have seen a significant increase in revenue, driven by AI-powered scenarios and client acquisition. Short plays and comic-style short plays have also shown solid growth momentum. The consolidation of e-commerce business and online marketing services has further boosted revenue growth. Live streaming and the ideal housing, Chinese letter business have also contributed to revenue growth. Overall, These factors have collectively driven a 13% increase in revenues from RMB 126,898 to RMB 142,776. Net income experienced a significant increase in 2025 compared to the previous year. The company's net income rose by 16.5% year-over-year for the full year 2025, with a substantial jump of RMB 5.3 billion, 35%, from 2024 to 2025. This growth can be attributed to the accelerated execution of the AI strategy, which enabled high-quality growth across user scale, revenue, and profitability. The profit margins also underwent changes in 2025. The adjusted net margin stood at 14.5% for the full year, while the gross profit margin increased by 0.4% to 55.1%. However, the operating margin decreased from 14.9% to 14.6%. This slight decline in operating margin can be attributed to an increase in revenue sharing costs and related taxes, which rose in line with revenue growth. The net income increase of RMB 0.5 billion, RMB 5.8 billion, RMB 5.3 billion further highlights the company's financial performance improvement. Overall, the changes in net income and profit margins can be attributed to the successful execution of the AI strategy and the associated growth in revenue and profitability. The company's financial performance indicates a significant improvement in its ability to generate cash from its core operations. The net cash generated from operating activities for the year ended December 31, 2025, stood at RMB 26,716 million, which is a positive figure. This suggests that the company has successfully managed its expenses and revenue streams, resulting in a substantial increase in operating cash flow. As a result, the company is now generating positive operating cash flow, indicating a strong financial position and ability to invest in growth opportunities. Management is expressing optimism about the company's outlook, citing significant improvements in key areas. The acceleration of their AI strategy has driven high-quality growth in user scale, revenue, and profitability. With a 13.4% increase in profit compared to the previous year, management remains committed to its mission of creating long-term value. The company is experiencing notable growth, with domestic revenues increasing by 12.7% year-over-year, and a 32.1% rise in profit before income tax. Overseas operations have also shown improvement, with operating efficiency leading to a narrowing of the operating loss. In the fourth quarter, the domestic segment saw a 12.5% QoQ increase in operating profit due to an 11.2% growth in domestic revenues. Management's optimism is well-founded, as the company has achieved significant milestones in revenue and profitability. The AI strategy is proving to be a core engine driving long-term growth, and management remains committed to advancing this strategy. With a strong outlook and continued improvement in key areas, the company is poised for future success. The company's financial activities have been documented in various summaries. One notable aspect is its dividend payment history. According to the records, the company has indeed paid dividends on multiple occasions, with specific mentions on page 11, page 45, and page 48. Regarding share buybacks, the information is less clear-cut. While there is no mention of share buybacks in most pages, a single instance is found on page 29, where it is explicitly stated that the company has bought back shares. There is currently no cause for concern regarding inventory buildup or supply chain disruptions. According to the latest information, the current stock levels and logistics systems appear to be functioning smoothly, with no signs of overstocking or potential bottlenecks in the supply chain. This suggests that businesses can continue to operate without worrying about inventory management issues or disruptions to their supply chains. That concludes the financial summary for KUAISHou Technology. Feel free to comment below, and I will be happy to answer them when possible.